Salesforce announced their earnings after the market closed, and I wanted to analyze the company now that I have a new set of financial statements. I like to value companies based on their intrinsic value of the free cash flows they're going to produce in the future, as well as the profits they're going to produce in the future. As you may know, Salesforce is a big software company. It's a SaaS company. They've been very successful. They're leaders in the whole customer experience space, doing Salesforce automation, service automation, e-commerce, all things relating to the customer relationship that businesses have with their clients. It's a very successful company. The advent of AI has really changed their business, really beginning to revolutionize how we provide service, sales, marketing, all kinds of things are going to change very quickly. I think the market is waiting to see if Salesforce is going to be ready for the AI paradigm, the new generation of software. I'll take a look at the financials and see if I'm seeing any evidence of them being successful in the AI era. So let's get into their financials that were released in their earnings. Then I'll get into the valuation of Salesforce and arrive at a decision. I'm currently a stockholder of Salesforce stock. I'll decide whether I should buy more shares, hold, or sell my shares of Salesforce. The earnings for Salesforce were very good if you measure top line growth. Their revenue grew by 10%. They are a very big company. That represents in the quarter, they did $10.2 billion of revenue. It's very good. Also, their subscription revenue expanded by 11%. These guys are a software as a service company, a SaaS company. Overall, their operating margins expanded in the quarter, which is good to see. And they bought back a lot of shares. They did $2.2 billion of share repurchases. That's very good. And they paid a dividend. The highlights of what they are converting their business into are in the business highlights section. They really are going after the AI type business in the sale of Agentforce. And this product represented $1.2 billion of revenue, which is up 120% if you compare it to how much they sold a year prior. They closed over 12,000 deals of Agentforce, which looks good. So they're really focusing on this part of the business. They also have commercials with famous actors really pushing their Agentforce business. So that looks good. The guidance was a little bit light. 8 to 9% is acceptable. It's just not really ambitious. And maybe the market's not liking that. They're growing at 10% and SaaS is growing at 11%. So maybe they could have reached a little higher than what they're putting out there. And overall, their profitability was lower than one would like. So overall revenue, I liked. Profitability could do better. Free cash flow looked really good. The free cash flow did expand well. I like that about their performance in the current quarter. And those are the highlights that I'll put out there. The cash on the balance sheet looks good. Debt remained the same, but their cash increased a little bit. And their cash flow is higher than their run rate was before. I'm actually going to increase the growth rate of free cash flow going forward. Salesforce, the stock has gone down 23% year to date, not having a good year at all, even though they continue to grow. And today, the market is selling off the stock after initially reading the earnings release. So it looks like investors are not liking what they're reading from their financials. They will be doing their earnings call. Maybe things will turn to the positive after the CEO and other executives talk to the market. During the day, during normal trading hours, they were up about 1.42. It seemed like they were rallying into the earnings, but I guess the earnings fell flat. Overall, this is a big business, $245 billion in market cap, revenues of $38.5 billion. PE this year is at 39, but next year it's going to come down to 21.69, which is very rational. Analysts think it's discounted by more than 33%. And after we have the haircut tonight, that'll be even a better discount. When I look at their growth, they've been a growing business forever. And they're become very big, $38.5 billion of revenue. That's a pretty large company. They have terrific margins, but they just don't get a lot of revenue down to the bottom line. I think that's might be ailing the stock. They have 77% gross margins, but they don't keep that margin all the way down to the profit margin. Now, if they could be at 25, 35% profit margin, then I think this stock would really get exciting. They are expanding it year after year, but they got to do a better job. There was an announcement that they laid off something like 4,000 people. Maybe that's going to help the profit margin. It's unfortunate that that many people lost jobs, but maybe that's what they're dealing with. So the free cash flow looks really good, 32.77. Free cash flow did grow much faster this time as or after these earnings were announced. The balance sheet looks really good, lots of cash, more than debt. That looks really, really good. Let's see what analysts are saying. We got 31 analysts weighing in on Salesforce. The most optimistic analyst says, hey, this is a $430 stock. The most pessimistic one is at 225, which isn't far from the current stock price. So on average, you're saying, hey, this stock's discounted by more than 33%. That's pretty attractive. When we look at their forecast, they're going to keep growing. In fact, they're going to grow a little faster in about 2 years and really keep that growth. And their revenue is going to expand nicely. So days ahead look really good for Salesforce. I updated my valuation of Salesforce, looking at the net present value of future free cash flows for the company. And I also did a net present value of future earnings per share for the company. When I value the company using the free cash flow method, 42% discount. When I value the company using earnings per share at 26% discount. So combined, I'm at a 37% discount, meaning each share in my mind is worth $408, but they're trading for $256. Analysts were at 33.4 something as a discount. That was their consensus. So I'm right there with them. I'm just a little high, but right there in the neighborhood of where they're discounted. Overall, I think Salesforce is a good company, good business with growth, and they are in AI. So this is a buy for me. I'm going to accumulate more shares of Salesforce. I think it's a terrific opportunity to buy into a very good business. Salesforce is number one in their category of software, which is customer relationship management, customer experience, customer data, um, you know, enterprise customer data information. They're number one. Clearly, nobody even comes close. And that specialization, I think, is going to make them a very successful company for many, many years, which is why I want to be an owner in Salesforce. Right now, the market is really discounting the stock. And I've done this before, believing in a business that I think is doing really well, performing well on their financials, and the market just doesn't like the stock for a while. It may take some time, but I think this will be a good investment for me. That's my review of Salesforce. Hope you found it interesting.